Hi, everyone. Thanks so much for joining us for another edition of Royal LePage Binder Live. My name is Arms Bumanlag, host of RLP Live, and very happy to talk about what quite a few folks here in the region, inside of the real estate industry, and certainly outside of the industry. Maybe you're thinking about buying, maybe you're thinking about selling, maybe you're thinking about making a move. We want to break down some numbers from last month, July 2021, and the latest stats and information for you to absorb. And joining me on the show today is a great guy, knowledgeable of real estate, our owner and broker. Mr. Frank Binder is joining us here to kind of break down those numbers for us. Frank, always good to see you, my friend. How are you?
Good to see you too. Oh, good, really good. Actually, can't complain at all. We've had a nice summer month. It's one of those things. A lot of people trying to get away. I was one of those. I got away for a week, and so I think everybody headed up into the North Country just to get a break. So, yeah, it was good. It's all good. Yeah.
I just think it's a great time of year for a lot of folks to kind of reset, recharge, and reassess. And I mean, those words particularly echo with what's been happening in the market too. And I'm so glad that you made some time for us today because I wanted to talk about and get your insight on comparing last year's market to this year's market, and what you want the public to know because of the pandemic as well.
Well, if you remember, the pandemic was declared in mid-March. I think it was the 17th of March or something around there, and then we went into a lockdown for a period of time, well into April. So that affected our spring market last year substantially, and it kind of pushed all the market right back into the summer because by the time we really got rolling again, it was well into late May, beginning of June. So your typical spring market is April, May, June type of thing, and it became June, July, and August last year. And so what we had is we had really a lot of stuff going on in August. Nobody could go anywhere anyways, so that didn't happen. This year, quite the opposite. So what we had a regular spring market, and then we had the shutdown. If you remember, where did that occur? It occurred in June. So from that point on, it was basically it had a bit of an effect on our market. And then eventually, what happened is when quite the opposite happened. Once we got out of the lockdown, everybody took off. Everybody go, and that's typically what happens in the summer when you think about it, right? In June, everybody's got their kids out of school and off they go, and that's just generally what happens in our marketplace. So we always expect to slow down in the summer, and we called it a lull. We suddenly get this lull, and we're going, wait a minute, what's going on? Because the pace of real estate was moving along pretty quickly, but there's other factors, of course, that come into play with this thing. But at the same time, what we're seeing is really a typical summer to some degree. We're not sure if that's the only thing that we're seeing, but time will tell. I think September will give us a good sense of what that is, and as we lead into October. So.
Yeah, it's interesting you say that too, Frank. I think with all those different factors, with people being locked down and sort of that urgency to get out of Dodge, so to speak, and kind of get out of their neighborhoods and get out once those restrictions were gradually eased, I would assume that sort of played into the overall factor of the market as well in July.
Yeah, and it plays into the buyer side too. But we also had people that were putting their houses up. We had more houses being put up on the market. So I mean, there's that side of the coin as well. So what we're looking at is it's one thing to talk about those type of dynamics, but it's another thing to talk to us about what's happening in the marketplace. And we've been seeing the trend for now three months, and we'll get into that in a short time. But for the first time in a bit of time, we've got this the average sale price dropped ever so slightly from last month's 555 to 542. So you saw a bit of a drop, and there's a reason for that, and we'll get into that a little bit later. But it's an incremental drop, and it's not an unusual thing for our market to see that, because what happens in February, March, April, when there's nothing on the market, you're going to get very high prices at that time. And then what happens is as more and more supply comes on the market, that invariably drops ever so slightly anyway. So this is not unusual for us, not unexpected for us. So it doesn't mean that our the bottom's falling out of the market. It's not. It's very robust. It's still moving along very well, and I don't think we have cause for concern. But we need to follow the trend, and that's what we're going to be looking for down the road.
And it's interesting you should say that too, because I think a lot of folks will take a look at sort of the numbers going up and the numbers going down, and taking a look at those actually being units being listed in July too. But like as you said, I mean, there's still that uptick. I mean, if you compare it to last year, right, Frank?
Yeah, I mean, and And people are trying to take advantage of the market too. I see, if you're getting good prices for your houses and this is the time to sell them, why not do that? And we're seeing a lot of that. A lot of people are testing out the market, see whether they can get the prices that they've come to expect, so to speak, over the last 3 and 4 years. So, bottom line is that you see this playing out in the listings going up, but what you did also have in July is the sales going down, and that's another thing. What that meant was demand was less in July, and that might be part and parcel of the people leaving. A lot of buyers took off and did their summer thing. But the bottom line was, whatever the reason, there were less sales. And when there's less sales, that's something that we have to pause and look at, because when you're getting more supply and less sales, it's going to mean a price change eventually.
Something else here, just the units sold by price range as well. I mean,
Yeah.
you're taking a look at some of these numbers here. I mean, that's a pretty big one, over 500,000 there as
Yeah.
well.
Well, if you remember last month, it was almost even. It was when we went to 500, it was basically an even. The highs and lows were the same market, the same amount of activity in both the under 500,000 market and the above 500,000 market. Now we see it that it's diverged, right? There's less activity in the under $500,000 market and more activity in the upper market. That should actually mean that the prices actually go up, but there was a significant drop in sales. And that's that. So therefore, what happened? We had a slight drop in sales, because what's happening in the upper market is that while we're having just a great amount of activity in the upper market, it's not as many. So what we're still seeing lesser houses being sold in the existing market, in the upper market, right at the moment. And that's been a trend for the last 2 months. And so that's one of the things we have to, when those trends do affect it, and so it affected the price somewhat. It wasn't strong enough to carry the price right through this situation that we're going through right now.
One thing I wanted to ask you too, Frank, has the Toronto effect increased or has it diminished in your opinion here?
Well, let's understand that we're not living on our own here. A lot of people are coming to this area, buying in this area. We've seen a drop in that, right? There's less people coming to our market now, only because a lot of these other areas are facing the same realities that we are. So if I was, say, for example, if I've got to come here and I've put a non-conditional offer on a house to buy the house, will I do that not knowing that my house will sell? Okay, so I'm a little less courageous, so to speak, to go and do that if the market in my area is slowing down as well. So the tendency is, wait a minute, I'm not going to take that risk. So what we're seeing is fewer of them. Still doing it, but fewer of them. And what we're seeing that in our general market is that where we might have got anywhere from five to 10 offers, well, now we're getting 2 to 5 offers, 2 to 7 offers, something like that. Many less offers. Ultimately, for what we're seeing is prices slightly less over the list price than we used to. And that's what's happening generally. But sure, I'm positive part of that is the Toronto effect, if you want to call it. We call that the Toronto effect. It's just the number of buyers coming from that area, and that has slowed down. There's no question about it.
Now, Frank, would you say that, I mean, when it comes to dealing with, sales representatives, real estate agents, and certainly our team right across our brokerages too, that is, again, very much managing those seller expectations and trying to indicate to those buyers whether, it's a strategic price that they're putting on their particular property or looking at, or sort of the market price going forward?
Well, Booms, Arms, the problem that we have is this. All you've got in the media over the last little while is just this fact that the market is getting crazy, getting hotter and hotter and hotter and hotter,
Sure.
and nobody's ever put nobody's doused the marketplace a little bit and said, wait a minute, the expectations maybe are too much. So the idea that we have been giving sellers this expectation for some time, that just put a price out there and 6 days it's sold, you're going to get more than you ever thought you would ever get, and so on and so forth. Well, that has to be changed. We have to change that mantra a little bit, because that's not exactly the case anymore. All right. So we have to look at the trends, but understand that these things are subtly changing, and we have to make sure that we're going to be okay. I mean, I've said to my entire sales group here is, after the pandemic, so to speak, or after CERB and after all this stuff, what's life going to bring us? Well, we could have some major changes there. We're not sure. So you have to think about these things and understand what's going on. And we've seen trends, and the trends are, I look at trends all the time. That's what I pay attention to for my own group, to make sure that they're giving the right answer to their sellers and buyers as to giving advice to them, right? So that's really, really important for us to know that, going forward. And the trend really has been, there's still most of the property selling overpriced, over the list price,
Mhm.
but less so. They're not, the gap isn't so high, because you've just got less. When you have less buyers, your gap isn't going to be quite as high. So that's just, it goes without, goes. It's the rest of the rationale.
It's funny you should say that too, Frank, because the market. It'll be interesting to see what happens as we go forward. I mean, we're hopefully gradually reopening here as things
Mhm.
continue into the fall and into certainly 2022. Hard to believe it's going to be 2022, but it will be
Yeah,
2022
yeah.
before we know it. And the government not necessarily supporting the economy maybe as robust as it once did. So, I would think that those various components are going to have effect long term on what we're going to see in the market overall.
Yeah, like I've always said to all of my group, the economics will come to bear at one point. I just don't know where that point is yet. And the government is still supporting the a lot of individuals that they should. There's no question about it. Don't doubt that. But the bottom line, it will come to an end. And as it gradually comes to an end, we'll see whether or not, whether how many survivors there really truly are, going forward in all this, and whether that'll bring some kind of economic problems for us in the foreseeable future. I'm hoping it won't. I'm hoping the economy will kick in, and all will be well. We'd like to see that, but the bottom line is that that is a possibility, a distinct possibility that we need to think about right now.
What's your opinion so far? I mean, we've been talking about this, and again, I love, Frank, how you give that sort of ground level insight, right? Because it's not like it's like a huge fire, right? Like you said, everything's hot, 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 sell, sell, sell. But it's like, okay, it's a slow burn now. But I mean, what's your opinion on the investment property market and that whole sector of real estate as we can, from last month even heading into this month?
I think that's still strong. I think the investment part of the market's going to be strong. I mean, there you're looking at, some other ingredients, right? You're looking at the rentals, right? What's the rental market bearing? And all I've seen right now is strong rentals. They're getting, good rents, for their units, and I see that, to be, very, very strong. There's no question that that market should continue, and that investors should be, welcoming, the fact that they can buy real estate. And a lot of these investment properties there's some renovations that they go with it, and then they're trying to get existing rents if they can. So a lot of that type of stuff is happening. We should be happy about that too, and in terms from a city perspective, because if I'm taking older buildings and I'm renovating and I'm updating it, that's always a good thing, right?
Mhm.
So a lot of that stuff going on, a lot of that activity still going on. I still think that's going to continue as long as rents, continue to be where they are. And I don't see any drop in that, in vacancy rates substantially, over the next little while. Again, it's a case of, are we being supported, not being supported? Will that change in a month, 2 months?
Sure.
We'll have to keep an eye on that. But right now, for the foreseeable future, I don't see that at all. And we're getting a lot of the university students back on campus.
Mhm.
So one of the things, that's a huge factor, right? So we've actually seen some people, a lot of people coming to the market looking for those, institutional rentals again, and that's a good thing. That can only, help us out in terms of that market.
Another good thing too, I wanted to talk to you about too, and I thought this was really interesting as we were Jen and I and yourself kind of talking about what we were going to talk about today is the condo market here, and I wanted to bring this
Yeah.
up too because that's some good insight about where the condo market's going.
I was actually a little bit startled when I saw this graph. Really, and it's quite interesting because this takes you from, 10 years ago, and you're looking at, you're right at that $100,000 mark, and it's gradually going up, and then all of a sudden, about 2018, 19, what do you see? You see that graph spiraling up, and we're at 325 on the average right now, in the condo market. So I mean, that's, 325. That's three times, right? That's three times what you had, 10 years ago. So obviously, there's been that effect. And the fact of the matter is that we haven't even really discussed how condos are part of the rental market, because a lot of people buy condos to rent them out, right? So that's another part of that it's helping the rental market in that sense of the word. But the condos are extremely good. I think really a lot of people have first-time buyers in particular have moved to that market, as well as seniors have gone to that, and they've gone to condo apartments because now they've got a great selection, particularly of new builds. The only thing with new builds is what may be happening is the cost of construction has got to be pretty expensive. So to be able to bring these at a price that's affordable to even a senior, to a first-time buyer, is becoming maybe a little bit problematic, so to speak. So the bottom line is, I think we have to be concerned with that. But right at the moment, we've got a lot of people who have signed up for new condo apartments, put reservations down, so on and so forth. So we're seeing a lot of that activity at the moment. I hope it continues.
It's interesting you should say that too, Frank. I often say to our agents and our sales reps when we do the Roy LePage Binder live shows, one of the things that continues to amaze me, being around the city, being working back in Windsor now, is to see those developments, see
Yeah.
those condos. I was out on Banwell Road a few days ago, and just to see some of those condos come up, and even out in
Yeah.
Lakeshore area. I mean, for me, being a Windsor guy, born and raised, it's like I look at this stuff, Frank, and I'm like, quite honestly, it's about time, right? It's
Yeah.
like,
Yeah.
a lot of places have this stuff, and it's like we're finally catching up.
And but the point of that is nobody wanted to take the risk in the past because of rentals, right? Our rental market was lousy; it was low, and what's happening now? If I can't sell them, I can rent them, right? So there's that mitigates any kind of loss for an investor who's looking to put up a building. I was down Lowson Parkway today. This great big giant, probably 10 or 12 floor building going up for rentals, right? When do you see that? I haven't seen that. So those are good things. I think that's a great thing for our economy. We've got many more scheduled. I know that you talk to the City of Windsor building departments; they're saying they've got all kinds of applications for these type of things. So I'm happy because that's really important to have that construction and have robust construction in that area for more of a balanced type of market that we need to have, right? So I'm happy to see that finally come to fruition.
So overall, though, I mean, I know we don't have a crystal ball, but I always like to get your insight because it's just so forward thinking, and it's so relatable, I think, to folks when they see these numbers, they see these stats come out, they kind of make sense of what's happening. If they're planning to make a move, planning to sell, maybe they're downsizing, maybe they're looking for a better home. How do you feel about the market overall as we wrap up 2021? I hate to say it, but a couple more months to go, and it'll be 2022.
Well, yeah, I mean, we're still looking at that. It's a little hard to say. Listen, when I see a trend where our list of sell ratios have dropped, it went from 77 to 68 to 65 to 60. That's basically a trend for me. And so the bottom line, I'd like to simply say that, yeah, it's going to be really, really great. But the trend's indicating that it may not be. So there's some headwinds here that we've got to deal with and have to think about. So, there's some caution that I always throw out. I'm a cautious type of guy anyways. I always do that because I'm following these trends and some people don't, right?
Yeah.
It's wonderful to have. But I mean, we have a very strong market. I don't want to give a sense that it's troubling to that point. We have a very strong market. You're going to sell your house. It may take a little longer to do that, though. Don't count on 6 days. It's not happening. Those things aren't happening in 6 days. We might get back to a regular market where it takes 30 days to sell a house, but that's okay because that's normal. Okay, that's normal. We haven't been that way for a number of years now, and that can happen. It's a possibility, and that's a bit of a struggle even for realtors actually, who are expecting that it's going to sell next week, right? But the bottom line is that we have to just make the adjustments. If that's the case, then we'll make the adjustments. But I don't see any major drop in price in the foreseeable future. But the bottom line is that the fall market will give that to us. We'll see that in September when we start looking at September facts. But right now we see a continuation of what we started to see in July, and that is just a tapering off, or if you want to go a plateauing, if you want to call it that, whatever the word you'd like to use for that. But that's what we're seeing at the moment, and I think that's okay. It's perfectly fine. All the signs of a robust market are still there.
Hopefully, folks, take some of your advice to heart. And I know they can always go to our website for more information on our brokerages right across Windsor and Essex County, RoyalLePageBinder.com. Just before we wrap up the show here, Frank, quick plug. I hope our scores don't plateau on the golf course coming up
Yeah. Yes,
in the next little
absolutely.
bit, right?
Next week we're on, right?
This is going to be a lot of fun. I know you're excited for this, and it's a socially distanced event as we raise funds for the Hiatus House.
Yep. Very good. Yeah. We're looking forward to that. We've been big supporters of the Hiatus House for quite a few years now, and they certainly need our help, and we're looking forward to it. So, we're hoping for good weather at the end of August, but I think we can count on that to some degree. So, yeah, we're really looking forward. We're thrilled that we could get it off this year. Normally, would have done it in June. We had to delay it, but it's working out right now, so it's good. Good.
Yeah, looking forward to seeing everybody on the course, and that's on Thursday, August 26th. We're going to have a lot of fun. More information on that, too, on our website and on our social media channels as well. Frank, a pleasure as always. Thank you for your leadership, and appreciate the chat today.
That's always great. Thank you, Arms. Yeah,
Thank you. Bye-bye. Frank Binder from Royal LePage Binder Real Estate. So as Frank said, there are some things to look forward to, and there are some things to keep in mind if you're buying and selling. But one thing that you should count on is the expert service and the experience from our sales teams, our sales representatives, and realtors from Royal LePage Binder Real Estate. You can go to our website, follow us on social media, and join us for Royal LePage Binder Live. We do this a couple times a week. Check in with our experts and our agents right across Windsor and Essex County, including Frank Binder. Always good to chat with him, too. So we'll do this again next month as well, and hopefully we'll see you on the course on the 26th in about a week's time from now, as we raise funds for the Hiatus House. Thanks so much for joining us. Take care. And again, make sure to like us on social media and follow along for the latest local news and information when it comes to the real estate market here in Windsor, Essex. Thanks for watching.